Good evening, everybody. Thank you for joining us on this Thursday afternoon or Thursday evening. I'm so used to hosting these webinars on a Tuesday afternoon. So on a Thursday evening, where we've got the privilege of having one of our directors from Forsure to give us a little bit of an insight and a talk about the ins and outs of income protection benefits. All right. I think there's a lot of questions with clients currently about income protection benefits, given the situation and the circumstances that we find ourselves in. So, but while we give a couple of people still a chance to join us, I'm gonna introduce our guest speaker tonight. It's Chris Swanepoel. He's got 24 years of insurance industry experience. He joined Forsure in 2016, and he literally serves clients all over the world. He's got clients abroad, locally, so he's all over, and then this technology thing is nothing new to him. Chris also received his CFP designation in 2006, and he also got the coveted Adelar Award in 2017. So we've got one or two people still joining us. Thanks for everybody that's joined us. If you're watching the recording of this, please, at the bottom there is a link that you can actually schedule an appointment with us. I'm going to put it into the chat a bit later, where if you want to schedule an appointment with one of your advisors, or maybe you're a new client listening in this evening to this webinar, just hit the link. It will take you to a page where you can schedule an appointment and even choose the type of appointment you want. Maybe you just want to discuss your will, or maybe you want to discuss your income protected benefits that you've got in your portfolio, and you've got some questions after you've heard the information that Chris is going to share with us tonight. So there's an ask a question button at the bottom of your screen. So please make use of that functionality. Pop us a question, ask Chris a question, and we can bring some light and give some answers on some of the stuff that you might be pondering about or thinking about. So without any further ado, I'm going to hand over to Chris. I'm going to kill my video, and let's quickly just say, Chris, over to you.
Barry, thank you very much. Appreciate it. Let's just share the screen. Barry, I just need to confirm, can you see the presentation on your side?
100%. It looks great. Thank you.
Perfect. Thank you very much. Good evening, everybody. It's nice joining you here out of the Western Cape, and I'm looking forward to a wonderful interaction with you guys. So income protection is relatively on everybody's lips these days due to COVID-19 and things that's been happening in the world, and trying to protect income of clients when it comes to sickness and disability and so forth. So what we're going to do is we're going to run through a brief discussion of about half an hour tonight with regard to income protection. So we'll be discussing the need, the temporary disability income benefit versus a sickness benefit, SANLAM'S claim stats, income versus a lump sum, aggregation, and what happens when you overinsured. So we find quite a lot where people say, when is it really the best time for me to actually start thinking about income protection, and is there a particular time that is right for me? So, and how will I know? The funny thing is that most people will only realize it when it's too late. Don't despair. We are there, and we're specialists in the field, and we are there to actually help our clients with regard to that. So when we look at South Africa, and just a couple of interesting facts with regard to South Africa's insurance industry, for those of you who don't know, South Africa is the most sophisticated life insurance market in the world. And we have actually many world firsts, like, for instance, dreaded disease, the sickness benefit that we'll discuss tonight, the overheads benefit, and then there's quite a few more. But for tonight's webinar, we're going to discuss income protection. But before I get there, I'd like to touch on, there are pretty much two types of disability benefits. So firstly, you've got your capital benefits, in other words, a once-off payment. And then secondly, you've got your income payments, or recurring benefits. In other words, a monthly income that is paid to the client in the event of temporary or permanent disability. So income protection as we see it. So interesting fact, statistics have shown that those who have the most birthdays lives the longest. So even though it might sound new to some people out there, it might seem logical, but unfortunately for a few people, it is where it actually stops. So most people do not think about the fact that what happens if I reach retirement age, but not in the health that I was thinking I was going to actually achieve my old age. So there are different types of income benefits. So we have death income benefits, severe illness income benefits, overheads for business people, and sickness benefits, the temporary disability benefit, and permanent disability benefit. So for purposes of tonight, we won't be looking at the death, severe illness, and the overhead income protection, but we'll be focusing on the sickness, the temporary disability, and the permanent disability benefit. So before we start with that, I'd just like to touch on one or two terms that I'll be referring to during the presentation. And the first one is overinsurance. So overinsurance, based on the dictionary, is in layman's terms where a person takes out more cover than what he or she is actually allowed based on legislation to qualify for. A typical example, a person earns 50,000 Rand a month, insures themselves for 80,000 Rand, and then the incentive is there to insure themselves to get a higher monthly income due to the fact that they've got the insurance. So that surplus amount of 30,000 Rand would be referred to as overinsurance. Actually, it's 75% of the 50,000. The difference between the 80 and that would be regarded as overinsurance. And then also I'll refer to aggregation. So aggregation means if a person qualifies for X amount worth of disability income, he might apply at different insurers for the maximum that they have. And what then happens is if a client is then disabled, all of the insurance companies will come together and say the proportionate amount between what the client qualifies and the percentage that each has at the insurance company or the different insurance company is what he's going to pay out. So the amount will be aggregated as such. So referring now to coming back to income disability, most people would think that an asset is the most valuable asset or asset class that they've got. In actual fact, when I have a look at a client's portfolio or any financial advisor out there, we can see that a house might be worth 5 million Rand or whatever the case might be, but your potential earnings and your future earnings is by far the largest asset. So as you can see on the screen, in this case, this particular individual has a future capital worth in terms of future generated income of approximately 40 million Rand. Now, that might sound like a lot of money, but to put it in perspective, this is a calculation done on a person who's 25 years old, earning 22,000 Rand a month, reaching the age of 65. So quickly, we get to substantial capital amounts in terms of earning potential for any individual over their lifetime. So at Good Forsure, we have a vast array of clients having different types of income, ranging from a minimum of approximately 13,000 Rand. The average that we have is approximately 107,000 Rand, and it peaks at about 3.75 million Rand, and this is on a monthly basis. Now, what is quite interesting is all of these different individuals, when we speak to them, has one question through the bank, and that is, my biggest concern is what happens if I cannot perform like I am at the moment? So what happens if something happens to my health and I cannot generate the type of income that I have? So usually what happens is when a person becomes ill for a substantial period of time or becomes disabled, your income starts reducing because of your earning capability that's reduced. When the income actually starts reducing, stress levels actually picks up, and it's a case for disaster. So what we'll be looking at tonight is the most important asset, which is your earning ability, how do we actually protect that particular asset? So when we look at income and lump sum, because that's the two that we discussed in terms of the benefits, the income is split into income benefits, the sickness benefit, the temporary disability income benefit, as well as permanent. And then we have a capital amount, which is a once-off payment, also relating only to permanent disability. So when a person is disabled, there's additional costs that occurs, and you can read through those in your own leisure while I'm talking. And these are costs that people really don't have most of the time on a monthly basis these days, while they are healthy. So just to list a few, when a person is disabled, you might need to travel for medical assistance and treatment. And this might not be in your own province or in your own town or city. You might stay in Johannesburg and you might need to fly down to Cape Town or vice versa to actually get this particular treatment at a particular specialist. You might need additional domestic help. This is an additional cost on a monthly basis. You might need a home nurse. Usually what happens is when a person is in this state, depression and anxiety is what's happening, and the person needs to go for additional sessions with a psychiatrist to get them through this particular ordeal that they are facing. There's a delay in the individual to get back to work, if at all they can get back to work, which limits the amount that they can actually earn. There's a reduction in income and future earnings, as I've said. And then lastly, usually from this point onward, the client is uninsurable. Now, uninsurable means something has happened to the client's health that does not places them in a position to obtain any additional risk cover, as we say, in the future. In other words, the risk is too high for this particular individual to obtain additional risk cover at any insurer. So the first section that we'll that we'll look at is a sickness benefit. Now, a sickness benefit is a benefit that pays a monthly income to a particular individual that covers the client's temporary inability to work and to protect a possible loss of income. Now, the focus here is on the sickness, not on a loss of income. And I'll refer back to this a bit later. So in the sickness benefits case, a loss of income is definitely not a requirement. So who qualifies? It's people with a 3-year degree or longer, referring to as graduates and professional people. And the benefit protects the client up to the age of 65 or 70 years of age, depending on what the client has chosen. So the waiting period selection, there's various waiting periods that the client can choose from 7 days, 14 days, and 1 month waiting period. Now, usually the longer the waiting period, the lower the monthly contribution. Now, just touching on what a waiting period means. A waiting period means the client needs to be off sick for this particular nominated period. Let's say a 7-day or 14-day waiting period. And then at that particular point, the client starts qualifying to submit a claim. Now, with a 7-day waiting period, the waiting period is then backdated to day 1, and the client receives payment for the full 7 days or for the amount of time that the client was off sick. For a 14-day and for a 1 month waiting period, it is not backdated, but it's actually counting forward from that particular time. Then the benefit payment term and selection, we have a 3-month, a 6-month, a 12, and a 24-month period that the client can choose to receive the benefit in the event of a sickness. Excuse me. So the conditions covered are most illnesses and injuries resulting in sick leave, even while on normal or even special leave. So what is also important to note is that the sickness benefit covers for partial claims. There's no window period for claim submission. To give an example, I was referred a client approximately 2 months ago, if I remember correctly. And this particular individual had a sickness benefit at the time when her son was born by means of a cesarean section. And this is 4 years ago. I picked up that she did not claim for that particular event, and we submitted the claim, and the claim was paid retrospectively based on the amount that the benefit was 4 years ago. Surely the benefit increases with inflation on an annual basis, so it will not be based on the amount that the benefit is currently, but what the benefit was worth at the time when she had the cesarean section. So as I've mentioned, pregnancy complications and related claims is covered under the sickness benefit, and special leave. Now, special leave refers to, what do you call it? Retrenchment. Sorry, I couldn't get to the word. Retrenchment, people taking a sabbatical and so forth. So what SANLAM does is, with regard to the sickness benefit, is the client will still be in a position to claim even though they are on special leave for a period of 12 months after they left their employer. Now, remember I talked about the aggregation. This particular benefit has no aggregation. So additional rider benefits that can actually be added to the sickness benefit is the child and the spouse protector benefit. So this is an additional benefit linked to the sickness benefit, which ultimately pays for up to 6 months, if any of the children, the biological or adopted children, legally adopted children of the life insured or the spouse is off sick for specific nominated illnesses or particular accidents. So why we've done that is we found at SANLAM that when the life insured is sick, surely you will claim naturally for the sickness benefit. But when a child is off sick or the spouse is off sick, then it has a direct influence on the life insured's earning ability. And that's why we placed the child and the spouse protector benefit there, to actually assist the life insured, even though it's not he or she as the primary insured that's sick, to receive payment for their immediate family to assist with these additional costs that they might incur during this period of sickness. So what is also a proud moment in our history, and this is a fact that's been going for quite some time, is that more than 95% of all sickness claims are processed within 3 days of receiving that claim. Now that's something special. If you have a look throughout the insurance industry, that is of very high standard. So having a look at disability in terms of the disability definition. Now before we get there, I'm just going to take a sip of water, if you mind. Thank you. So when we look at SANLAM'S disability, SANLAM has a 3-in-1 definition, or 3 definitions enrolled into 1 definition. So the first aspect that we look at when a client submits a disability claim is occupation. So when we look at occupation, SANLAM pays for a client's regular occupation. Now, there's a subdivision under occupation disability as well. So throughout the insurance industry in South Africa, you basically get 3 types of definitions when it comes to disability. So firstly, you get own and similar occupation disability. Now, this pretty much means when a client submits a disability claim, the insurance company will say, all right, okay, we understand that you're submitting a claim, but let's see what else the client can do by virtue of qualification, expertise, and experience in a similar field. For argument's sake, can the client become a lecturer at a university? So the definition does not say there needs to be a position available. The definition says, can the client or can the client not? And if the answer is yes, the client can qualify to be a lecturer at university, then the benefit does not pay out. So that's the first definition. And as you can see, it's a very gray definition. It's a very large, broad definition, which is not ideal. The second definition is specific nominated occupation disability. So typically, you find a lawyer, or for argument's sake, an attorney that applies for particular cover. On the application, the person says, I am an attorney. And as time progresses, he moves up in the corporate ladder, and eventually he is now a manager, or he is not practicing as a particular a lawyer anymore, or as I said, an attorney. If this individual did not notify the insurance company about the occupation change, the insurer has the legal right to refer this back to the previous definition, which is own and similar occupation, because the onus lies on the client to make sure that the insurance company is aware of what he or she is doing. So I'm not sure about you guys, but I don't feel comfortable with that definition, because when I pay my premium on a monthly basis, I'd feel more comfortable knowing that doesn't matter whatever I do, I'm covered for that particular occupation. So, and that brings me to the third definition of regular occupation disability. So, sorry, I think I accidentally clicked on that. So, regular occupation disability refers to what SANLAM'S definition is when it comes to paying a disability claim. Now, regular occupation disability pretty much says we're covering the client for whatever the occupation is that the client does on a regular basis. That's it. So it doesn't matter how many times you change jobs, doesn't matter from how many employers you jump, if you start your own business, if you're back into formal employment, it does not matter. You are covered for that particular regular occupation that you do, that you do on a regular basis. So out of the three, remember I said the first one is occupation. Now, the second leg that we're looking at is acknowledged or recognized disability. Here, someone will have a look at the loss of 2 eyes, 2 hands, or even 2 feet, or a combination of 1 hand and a foot. So any one of those will ultimately qualify for a claim. And then the third definition that's enrolled in the one, as I mentioned, is personal. Personal refers to a person being unable to take care of body or personal interests. As you can imagine, that is also not an ideal scenario for any particular individual. So all of these are enrolled into one definition at SANLAM, as I've just mentioned. But what SANLAM also includes is the following: neck and back conditions, quadriplegia, paraplegia, malignant tumors of the spinal cord and the vertebral column, and failed back syndrome after multiple surgery. And unfortunately, I have a client who's been in a botched hijacking a number of years ago, and he was shot. Unfortunately, this particular individual is paralyzed from the chest down, and this is under the paraplegia section where the benefit then paid out for this particular individual. So when we look at now the income protector of the disability benefit, so now we're referring to the temporary disability income benefit. And the temporary disability income benefit, now what I'm saying might sound a lot like the sickness benefit, but I'll touch on the differences between the two actually side by side when we get to a little bit later in the presentation. So total disability income benefit is an income that the life insured receives when he or she is temporarily disabled. And of course, the purpose is to cover the client for a temporary inability to work due to temporary disability, and here's the key, resulting in a loss of income. Remember what I said, the sickness benefit does not require a loss of income. So here, the temporary disability income benefit does require a loss of income. And who qualifies? Well, pretty much anyone. So self-employed people as well as a salaried individual would qualify for this benefit. So again, the protection age is from age 55 to 70 in 5-year age brackets. And the waiting period that the client can select from is 7 days, 14 days, and 1 month. And the selected benefit term that the client can insure him or herself for is 3, 6, 12, or 24 months. Now, what are the conditions that's covered under the temporary disability income? So the conditions that's covered under it is conditions that renders the client disabled to the extent that he or she is continuously unable to fulfill a substantial and material part of the duties of their regular occupation. Remember, there I talk about their regular occupation again, that he or she practiced for income immediately before the disability. And here's the key, resulting in a loss of some or all of income. Now, that's the crucial part. Now, on this temporary disability income benefit, we can include the child and the spouse protected benefit. I'm not going to touch on that again because we've done that. And here is another key factor, aggregation. So what I said with regard to the sickness benefit, remember, there's no aggregation. With regard to the temporary disability income, there will be aggregation. So when we look at the differences between a sickness benefit and a temporary disability income benefit, we see, just as a highlight, the sickness benefit, there's no proof of loss of income, as I've mentioned. There's no aggregation. It pays even whilst on leave. It's not offered by all companies, and the payment is based on the client being booked off from work. In other words, just being off sick. Now, that statement is also slightly incorrect because you might be on leave. You don't have to be booked off from work. You need to be booked off by a medical doctor, by a medical specialist to qualify for this claim. In contrast, we have the temporary disability income, which is offered by all companies. The payment is based on a loss of income, and there may be a request to prove this loss of income from the insurer, and there may be aggregation. So when we look at the claim side, the claim procedure on a sickness benefit, we'll ask what is the illness or the injury? And this might result from, I'm just thinking about claims that I had in the past, from resulting tick fever, wisdom teeth being removed, pregnancy, and so forth. The list just carries on. Have you been booked off by a medical doctor? And if those two answers are yes, then we can submit a claim. On the other side, when we look at the temporary disability income, what is the illness or the injury? What is the occupation description? Now remember, on the sickness side, we did not touch on occupation, which we do now in terms of the temporary disability income. And does this illness prevent the client from doing a material or substantial part of their occupation? If those answers are yes, then we can submit a claim. So just to summarize, is the benefit exclusively available for professionals and graduates? The sickness benefit, yes, most definitely. Like I said, in terms of the temporary disability income benefit, anyone can actually apply for that. When we look at are the claims payouts during the benefit term free of aggregation, we've touched on this. We said yes, the sickness benefit, and no in terms of the temporary disability income benefit. Self-employed, if a person is self-employed, does the definition of income include overheads? On the sickness side, yes, and on the temporary disability side, no. Does the client experience comprehensive cover during special leave? And this happens, especially now during this lockdown period. Yes, for a sickness benefit, and no for temporary disability income benefit. Is a sick note and a claim form the only requirements for a claim? Yes, again, for the sickness benefit, and no for the temporary disability income benefit. And then lastly, is the 7-day waiting period applicable to all claims? For the sickness benefit, it is yes, and the temporary disability income, no. And this is now referring now to a 7-day waiting period on the sickness benefit. And as I've mentioned, the sickness benefit pays from day one. And is hospitalization required? Definitely not in terms of the sickness benefit, but in certain cases, with regard to temporary disability income, it is. Does employment status, self-employed, determine whether you qualify for a 7-day waiting period or not? And if it's backdated to day one, no on a sickness benefit, yes on a temporary disability benefit. So proof of loss as a measure that could be used at claim stage, and we said no, definitely not, and yes in terms of temporary disability benefit. So when we compare the two, when a person qualifies for a sickness benefit, without a doubt, that is the option that you would need to go for. But if not, then ultimately the temporary disability income is also very good, but it is for people who does not qualify, particularly for a sickness benefit. So now look at the fine print. So the T's and C's that we always see, but wait, if you phone now, you receive whatever, those T's and C's are very important. And we see this on a daily basis. Now, there is a bit of jealousy doing the rounds in the South African insurance industry, particularly based on the sickness benefit. And there's a lot of companies that actually do wish to qualify to actually be in a position to offer this to their clients, but they don't. So what is the best for them to do? So our rivals imitate a sickness benefit by doing the following. They give the client a temporary income protector as a sickness benefit with a 7-day waiting period. So now remember what I said, there needs to be proof of loss of income. So when you find an individual who is receiving a monthly salary, you've got your sick leave on the normal sick leave cycle. So if you're 7 days or 14 days of sick and you've got a temporary disability income benefit with a 7-day or 14-day waiting period, will that particular individual be in a position to claim? And the answer is no, because there's no proof, there's no loss of income, and the client cannot prove loss of income. So essentially what will happen is that the client actually is paying for a benefit that they hardly can claim on. And that's exactly the last statement that I have. So most people will not be in a position to claim unless if there is proof of loss of income. So these are the temporary illnesses or the temporary disability, referring now to the sickness benefit on the one side and the temporary disability income on the other. Now we're looking at the more serious stuff, the permanent disability. Now, permanent disability is now referred to extended disability income benefit. And as the word says, the disability is extended for an extended period of time. So what is an extended disability benefit? So this is a benefit that provides a monthly income to the client when they become disabled. And the purpose of it, of course, is to cover the client's permanent inability to work and a possible loss of income. Now remember, here we again refer to a loss of income. And the reason why the permanent disability refers to loss of income is to make sure that there's always an incentive for the client to go back to work, but also to keep the client on the level that they were. So let me use an example. A person earns 50,000 Rand a month. Because of the disability, they lose a part of their income, for argument's sake, 20,000 Rand. So now they are earning 30,000 Rand. And let's say, for argument's sake, the benefit on the particular policy was 30,000 Rand. So 50 minus the 30,000 Rand that they currently now is earning results in a loss of 20,000 Rand. So now 20,000 Rand of the income protector, the extended disability income benefit, will pay to keep the client on the same level of income that he or she was before the disability. Then who qualifies? So it's again self-employed people as well as salaried employed people, and the protection is any time from age 55 to 70 in age 5-year age bracket. But here's the cherry on the cake: a whole life option is also available, which means that if a person is disabled, this disability income will continue paying for the rest of the client's life. And this has always been a problem a number of years ago with regard to disability income. So when a person previously was disabled, the disability income carried on until the age of 65, and then it stopped, irrespective of the client's financial position. So the dilemma was at that stage is, during the term that the client was disabled, due to financial constraints, the client did not have the financial ability to continue saving towards retirement. So now what happens is, now the client receives the monthly income as they used to, because of the disability income. I cannot save towards retirement because this income that I'm receiving is supposed to go for medical expenses. Suddenly, boom, I'm the age of 65. My disability income stops. My pension is nowhere. And what do I do? And that's the problem. And this is why we always suggest, with regard to your disability income benefit, the extended one, to take the whole life option. It is slightly more expensive, but peace of mind definitely is worth that small additional cost. So the waiting period selection, remember, as I've mentioned before, the others were 3, 6, 12, and 24 months. This one has a 24-month only. And the reason why we have a 24-month waiting period on this particular one, meaning a person cannot claim the benefit before 24 months has lapsed. And the reason why is because disability usually takes approximately 24 months to establish disability, proper disability. Now, that's why we've got the sickness benefit, and I'll touch on that on another slide, to protect the client for the first 24 months, as well as the temporary disability income benefit, until such a stage where the extended disability takes over from that point onwards. So the benefit payment term selection, again, is between 55 and 70, but we definitely suggest the whole life option. And the conditions covered are illnesses that results in disability or functional impairment. Now, this makes me excited in terms of the last part, the functional impairment. When you include the pre-retirement impairment income on this disability income benefit, and this is always suggested, the 24-month waiting period is waived. So if anything happens that results in a functional impairment, the 24-month waiting period is waived, and it covers for impairments before retirement. And during this particular payment of the extended disability income benefit, the client's contributions towards the plan is waived. So the client is not paying towards the policy premium. So coming back to the sickness benefit, as I've mentioned before, so the sickness benefit covers you for the first 24 months, as you can see there in the green selection, which is highlighted by the red square. So once the sickness period has lapsed and the client is then determined disabled, then the disability or the extended disability income kicks in from that point onwards for the rest of the client's life if he or she chose the whole life option. So let's have a look at some claim statistics. One thing that we need to look at is when you are covered with SANLAM, you don't need to notify us about occupation change and smoking change. So a person might be a non-smoker when they apply for the cover. And this is any risk cover at SANLAM, by the way. And then later on decide to start smoking. You don't need to inform us with regard to that smoking status change. A person might decide to take up skydiving at a later stage in their life after they have started their cover. You don't need to inform us about that. And the last one might sound silly to you, but you don't need to tell us about the change of address other than for communication purposes, for us to send your portfolio through to you via post and so forth. Now, the reason why I say this is fine print is amazing. Now, a lot of people will discover that some insurance companies do actually have fine print in their contracts to say that if you did not tell us about a change in address, we have the legal right not to pay a claim. And the reason why these companies do say that is because city 1 versus city 2 or town, doesn't matter, or suburb, might have a different risk profile. And because of the different risk profile, they want to price it differently. And if they priced it differently and incorrectly, technically speaking, the client does not qualify for a claim. Now, that is open for interpretation. I've got my own feelings with regard to that. I'm sure you've got as well. Just to elaborate on that, SANLAM does not work on that basis, just for purposes of clarifying that. So what SANLAM is well in the business of doing is we like to pay valid claims. And we are in the business of trying to assist people to come through difficult stages and difficult times. So let's have a look at the claim statistics. In 2017, SANLAM paid 3.6 billion rand worth of claims. Now this figure increased to 2018 to 3.9, and the reason why I'm not showing 2019 is because it's a year backdating and the new figures have not been released. But if you have a look at the statistics, it's gradually increasing on an annual basis. Now, to break down the 2018 statistics in terms of the amount of cover that was paid, as you can see there, it was a 3.2 billion rands worth of claims for life cover, as we would assume would be the largest, but not far ahead is income protection. Now, that's again stipulating how important income protection is. because that is where a massive risk lies. When a person passes away, and I mean this with the greatest due of respect, when a person passes away, there's people whose heart broken, family that's devastated, and that's where it stops. When a person becomes disabled, that devastation continues for a number of years. And on top of that, there's the financial stress and the financial burden of not knowing how to make ends meet. And that is exactly what we don't want. So am I at risk? This is something to merely just make the playing field level in terms of understanding how we look at the risk. So when we look at a client's age, let's say it is a young individual, what is the likelihood that this individual will become disabled? Probably low to almost nothing. But what is the impact if it happens? The impact for a young individual is going to be massive because of the amount of years that this individual still has until retirement or life expectancy. Now, in my particular case, my youngest client was 23 when, unfortunately, he rolled his vehicle and he's disabled because of that due to a brain injury. The flip side of the coin also then says, well, that's if we have a look at a young individual. But what if it's an older individual? What is the likelihood of that happening? It's actually very good because the older you become, the more sick illnesses like heart disease and diabetes and multiple sclerosis and motor neuron disease and all of these illnesses that we really don't want creeps in. What is the impact on that? It's massive because that's where the massive costs lie. So it's not only about the income that I need to protect, but it's also about the additional costing that is associated with that. And as you can see there, in the last 4 years, more than 50% of disability claims were for heart disease, cancer, and musculoskeletal conditions. That's massive. So I'm not going to read through the whole slide, but just for interest's sake, in terms of the income protector, now I'm talking about the disability income protector. 30% of claims were for bones, back joints, and connective tissue. Now, this is quite interesting. The back is starting to increase in terms of percentage because people are not as active as what they were a number of years ago. We're sitting behind a computer, we're sitting behind a desk and not really moving. And that's why this kind of claim ratios and percentages starts increasing as time progresses. With regard to the sickness benefit, you can see there that 25% of men claimed for accidents, poisoning, and violence. So I'm not sure where the poisoning part comes in, but we'll leave it at that. So SANLAM'S got you covered. Again, let's just touch on that, as I've mentioned. So there's lump sum benefits and income benefits. On the lump sum benefit side, we need to protect capital assets, settle debt, that kind of thing. In terms of the income benefit side, we need to protect our income and additional recurring medical expenses. So which is which? Which one is more important? Which one do I really need? In actual fact, none to choose from, but it's a combination of both that we will always suggest. So the interesting thing is, it's really not funny when you're next in line and if you're not properly covered. So that is I think the key for us tonight is to make sure that you've got proper cover and that you've got sufficient cover to protect your biggest asset, and that's your earning ability. And as I say there, sometimes it's the smallest decision that can change your life forever. I thank you, and I hope you've got a wonderful evening, and thanks for tuning in.
Great, thanks, Chris. I'm just going to get my video back on here, and then let's get that out. All right, thanks everybody for joining us this evening. For everybody that's actually watching this as a recording later, because just to reiterate, this is actually live. We don't pre-record our webinars. We do them live. It's not like all the other webinars or some of the other webinars out there that gets pre-recorded. It just runs over and over and over. We do ours live. we want to interact with our clients. So we do post this on YouTube. So if you're watching this at a later stage on YouTube, please, in the description below, there is a link to schedule an appointment or download the link to the presentation. So Chris will be sharing his presentation with you. We also will be sending this out and in an email. And on your screen, you'll see there's a green button that says book an appointment with your advisor. Please use the functionality, set up an appointment. If you're wondering, or if you've watched this video and you feel, you know what, I don't know if I've got the right income benefit, or maybe I qualify for a sickness benefit, or should I maybe, am I overinsured? Maybe then those questions need to be answered by one of our specialists. So please make use of the functionality. Click the link, schedule an appointment, and we'll bring clarity on a personal basis with you. Once again, thanks for joining us this evening. I'm going to sign off. Chris, thank you very much. We really appreciate it. It added a lot of value, and it's cleared up a lot of things between sickness benefits, income protected benefits in the sense of temporary income benefits, extended income, and then capital disability as well. So till next week, Thursday, we've got a nice one coming up. Look out for the invites, and then join us again, and we'll chat again. Thank you very much. Have a good evening.